A Year for Accumulation with Monex, featuring Managing Partner of CPM Group and author of the Monex Precious Metals Market Outlook Report, Jeffrey Christian.
Hello, my name is Sean Brasney, Sales Director for a Monex Deposit Company. I'm here with Jeffrey Christian, Managing Partner and founder of CPM Group and the author of our Year for Accumulation report. Thank you for being with us today, Jeffrey.
It's good to be here, yes.
Yeah, Jeffrey, in the beginning of the year, we were still in somewhat of a downtrending to maybe sideways basing kind of market. And at the time, dealing with some low $1,200 gold, low $14 per ounce silver, and over the course of the first 6 months of this year, had investors heeded your advice and accumulated during that time frame, they would be in a really good position right now. So I wanted to really thank you for the report, the data that's in the report, and for doing these videos with us.
Yeah, we're happy and we're glad to work with Monex. We've worked with you guys for decades and we're glad to be doing it.
Gold and silver are often referred to as safe haven assets. And you made in the report a clear distinction on how that may apply to one's portfolio. I wondered if you can share that with us now, because I think it's really important, especially for the first-time buyer to hear.
Yeah, I think that the term safe haven investments is something that's often misunderstood. And people will think that that means that gold and silver as safe haven investments are less volatile in terms of their price movements than stocks or bonds. And that's not actually the case. What they are, what the safe haven assets mean is gold and silver have very low correlations to stocks, bonds, and currencies. In terms of the statistical correlation between real gold and silver price changes and real interest rate changes, it's virtually zero. And that's what you really want as a portfolio diversifier. It's very low against the dollar. It's very low against stocks. And that's what gold and silver do for an investment portfolio or for a person's individual wealth, is what they do is, because they're not correlated with stocks and bonds, is that they smooth out the overall wealth. So you don't have the highs and lows. You might have a sharp drop in stock prices or a sharp drop in bond prices, and that could cause investors certain distress. But if you have a portion of your wealth in gold and silver, that will tend to often, in the long run, balance out your wealth or your investment portfolio and make it more stable and less volatile. And that's what really is meant by these things being safe havens.
Platinum did recently hit a high of $1,000 per ounce and has backed off exactly like you had said it would in the report. But you also mentioned some headwinds moving forward, which makes me think that there's some opportunities to accumulate coming up. Would you be willing to share your medium to long-term projection for platinum?
Yeah, we think that the platinum price is a very interesting long-term play right now. Those headwinds are short-term. There's a shift away from diesel to gasoline, so there's a shift away from platinum catalyst to palladium catalyst in automobiles, and that's the major use. You're also seeing, you have been seeing a shift away from platinum to palladium and diesel catalysts, although that's pretty much over now. But platinum has had some headwinds that have caused it to be less dynamic in prices than, say, palladium, which is at record prices. You have inventories that are hanging over the market. You have a surplus of newly refined platinum entering the market relative to fabrication demand, and that's kept the platinum price relatively low. But if we take a 10-year view, we think that the platinum price could rise very sharply 5 to 7 years from now. And the reason we're saying that is we expect South African production to resume its decline. South African production fell from 2006 to 2013. It's been relatively flat ever since, but we think over the next 5, 6, 7 years, you're going to see another 10 to 15% decline in South African production. And South Africa is the largest producer. in addition to that, we think that you will see a reverse substitution. You're already starting to see it to a small extent, away from palladium back to platinum in autocatalysts. And you're also seeing very strong demand for palladium and the specialty metals that are byproducts of platinum, rhodium, ruthenium, and iridium. And the producers in South Africa, insofar as they have the capacity to grow their production, may be inclined to increase their production of all of the PGMs because the demand for the rhodium, the ruthenium, iridium, and palladium is great enough. So we think that, we first proposed to the South African producers in the late 80s that they think of themselves as platinum group metals producers and not platinum producers, and they fired us. But 30 years later now, they're starting to say, we need to think of ourselves as platinum group metals producers and not platinum producers. But we look at the interplay between South African production and fabrication demand for all of these metals, and we think that, 5 years from now, you could see the platinum market start to rise very sharply. So I don't see it as particularly a short-term investment, but as a long-term investment and as a nice portfolio diversifier, I think that platinum makes a lot of sense.
I wish we had all day to cover all these specifics, but each metal is covered in our year for accumulation report: gold, silver, platinum, and palladium. So I would remind our viewers to give Monex a call today, talk to an account representative, and ask for your free year for accumulation report. Thank you for your time, Jeffrey.